Hi, welcome to this video day, which is on the 16th of June. It's Sunday. I'm just going to give our updated outlook for the Japanese yen, which is one of our favourite trend-following trades at the moment. We're going to be looking at the yen against the USD and also the three commodity currencies, so the yen against the AUD, NZD and CAD. Now, in recent videos, I have looked at the yen against the euro. I'm not doing it in this video. You can check my video out which covered the euro yesterday, where I cover that pair. Now, in terms of the yen, we are just so bullish of this currency longer term. And yeah, in our last video, I think we're up about 1,000 pips on our yen trading, and it's now about 1,500. A lot of people have asked me, has it got further to run, this trend? I personally think yes. I do see a little bit of a pullback in USD JPY in the short term, though. But if the USD does rally, I think that'll be a selling opportunity. On the commodity currencies, the yen is hammering them, and it's going to continue to push them down. Any rally is a sell, in our view. Now, in terms of long-term trend following, yeah, it's one of our favourite ways of trading, and I just want to give some tips in relation to holding big trends as we go through the trade setups, which we're going to do right now. Now, in terms of charts, obviously, when I'm giving my view, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video, get live access to our member center. Right, we're going to do USD JPY first. Right, on the USD JPY weekly chart, I'm just on this chart, just see the big picture. We're just going to look at it very briefly and see where the really big levels are, and then we can match that up with the daily chart. Now, in terms of the USD, it obviously struggled up at the 112 level as we got interested in it. We sold off the level. It's now come down 108.56. Now, where is the key level of resistance in our view? The key level of resistance is here. That is the 110 level. That is a big level. You can see we struggled to get above it here. We did. Double bottomed off it. Got up, came down, struggled to hold the level. Now we're beneath it. Okay, so 110 now is the key level, and that is double trend line resistance with the trajectory there as well. Now, where are we going to go to? Now, in terms of when you're setting targets in big long-term trends, you can't do it from technicals. You need to know the fundamentals and sentiment behind the chart, which I'll go through in a moment. But our target is here. So the par level. So basically another 850 pips from where we are now. Now, in terms of the USD, we think there could possibly be a bounce. That bounce will be a selling opportunity, or you can take it on a break lower if, of course, you're bearish of the USD. So let's go to the daily chart, look at the fundamentals and sentiment behind the price action, and draw some levels of entry, stop and target. Right, on the chart of USD JPY daily, I'll draw my levels in a moment. Now, just in terms of for new viewers, I know that there's quite a few new subscribers watching our channel. I'm just briefly going to go through how we look to catch and hold big trends. Now, in terms of this quote at the top, very true. Big fundamentals rule the long term, sentiment rules the short term. It's an anonymous quote. I can't remember who made it actually, but it's very true in the Forex market. It's the big fundamentals. If they're in favor of one currency over another, you'll see big trends, very often more than 1,000 pips. But of course, you get those inevitable retracements because prices get to overbought or oversold. And if you want to catch the big trends, you've got to deal with those retracements. Now, come to that in a moment. But in terms of this quote, I really like it. Professional Forex traders don't use technical analysis to generate trade ideas. It comes from Jarrett Davis, an ex-hedge fund manager. He's totally correct. I don't know anyone who trades Forex seriously who's looking for big long-term trends who does it technically. They use the fundamentals to generate the trade idea. Then they manage the trade idea technically. When you do it this way, your technicals become very simple. Our technical analysis is extremely simple. I know there's a lot of people online who say they catch big trends purely technically. I could say now that they don't. And unless they give their trades, they're basically not telling the truth, let's say. We have to give our trades. And yeah, it's very easy to spot a big trend technically in hindsight, but doing it in the real world is completely different, okay? I do think, obviously, technicals in the shorter term are more important, okay? But I would still say, if I was when I am trading shorter term, I'm swing trading or whatever, I've still got my eye on the fundamentals and sentiment behind the chart, because that is where the price action comes from. Okay, but certainly in the long term, you can't do it purely technically because you've got no idea of the buying or selling power behind the chart. Now, when you're following big trends, you're going to have to deal with retracements. Okay, so you think percentages, not pips. Okay, I did this in a video the other day, and I didn't release it on my YouTube channel to all the subscribers. I think it just went in the channel and no one received a notification. But a lot of people said to me, well, that's perfectly true, actually. Once you shift to thinking about percentages, then you can hold those retracements against you. Now, in terms of percentage to target, I put 7.83 here, no leverage. That's if we go from here down to the 100 level, okay, which we looked at on the weekly chart. Well, that's no leverage. If you had just 2 to 1, you got over 15%, haven't you? That's a lot of money. You don't need too many trades with those sorts of percentages that you're aiming for, and you're using sensible logic to do it, to really boost your bottom line profits. And when we come to look at the commodity currencies, the percentages are even bigger. Okay, so that's the way we kind of view, getting into and holding long-term trends. And of course, you've got to do it in the real world with your technicals. I'll do them in a moment, obviously. But let's look at why the yen is so bullish in our view. Markets are becoming a bit more nervous, a bit more risk averse. I know stock markets are pretty firm, but a lot of nervousness about trade, tariffs and tensions, and slowing global growth generally. Okay, slowing up pretty hard, and it's not turning around anytime quickly. The yen is the #1 safe currency, so you're seeing big money flow into the yen. It's coming from domestic investors. Japanese are the world's biggest overseas investors, 500 trillion overseas a little while ago. They started to bring that home, and it's not going to slow up. Japanese investors extremely conservative, and they're being joined by overseas investors parking money in Japan. Why? They park money in Japan. It's seen as a very safe country in times of investor nervousness, and the yen is the #1 safe haven currency. Now, in addition, the JPY is very oversold on a historical basis, so it's going to play catch up to correct oversold. Okay, the short-term warning that the dollar could bounce is the market is just too bearish on US interest rates. Okay, so I think a bounce is probable. The big trend is down, however. Now I'm going to talk about 0.5 in a moment, but let's do the technicals. Now, in terms of when we first became interested in this trade, and this is what you should always do when you're long-term trend following, get the big levels where you know there's big order flow around and institutions are active. They're very active at this 112 level. And the market was pretty bullish of the dollar when it came up here, but just couldn't break higher. So we wanted to sell. We got in at 111.50. And then what we want is this 20-day moving average. It only works in strong trends, okay? But it will normally contain rallies. Rallies won't get really far through the 20, okay? They tend to gravitate, or price action will gravitate back to the 20-day moving average to correct oversold here. Get 3 touches, then down, touch there, then we sell off. Now we've got some sideways action and we're drifting back to the 20-day moving average. Now, from our perspective in at 111.50, we're at 108.56. Okay, so basically about 300 pips. Now, in terms of holding long-term trends, when you're doing it in real time, it is hard. Okay, no matter if you're experienced at it or not. And what we like to do, we had 300 pips down at 108. level, or over 300 pips. We took 50% of our trade in at 108. I think it was 28. That means we've reduced our exposure. We don't have to move our stop too close, and we've got the option to put it back in. And we're going to put it back in on a bounce or a break lower. Now, I think, if you look at the key level now, where is it? The key level is here. It's a big institutional level. It's the 110 level. I just do not see that level getting taken out on a close basis. It could, of course. Now I'm just going to draw a trajectory, which I'm going to do there. And that trajectory lines up with the 20-day moving average. Now, in terms of selling on a bounce or break lower, in terms of a bounce, obviously the 20 is there. The US is a little bit oversold. I think we can see it pop above that level, actually. I think we could go here. So just a little bit above it. That's really, where I think the rally will fade. It's back to 109.30. Of course, we could go through the level, but if it goes up there and starts to come off, I think that's a good area to sell on a bounce. Okay. Now, in terms of on a break lower, where would you sell it? Here. And you'll notice there's a kind of triple bottom over there. Double bottom, sorry, then you have a test and off, yeah? You have come back through the 108 round number, but there aren't any sell orders here, okay? So we've gravitated back. I think this level needs to be decisively taken out. If it is, then we're going down to 100, okay? So you could sell through here. The level I've got to put our 50% bank back in is 108.60. Break that level. It's not too far. No, sorry, 107.60. My apologies. It's not too far away. And that would set the next leg of the downtrend in motion. So if I was coming in fresh, I'd perhaps do 50% on a rally and then maybe load up on a break lower. You could do, well, it depends on how you see the pair, but obviously I'm pretty bullish of the yen and bearish of just about every other major currency against it. Now, in terms of, I'm doing the commodity currencies today, and I've put my main focus is not the USD. In terms of why I say this, the USD longer term is going to be a pretty firm currency in our view. It's the second safe haven. I do think the Japanese yen is going to push it down, but I think other currencies could go down quicker. I will trade USD JPY short because it gives me a little bit of balance if the USD does have weakness, okay? But no, it's not my favorite of the pairs that I've got down the bottom here. I've got USD and JPY, USD JPY and Euro JPY together. Same allocation of risk, okay? Then I've got AUD, NZD, CAD versus the JPY. So all those three are short. We're going to go and have a look at them in a moment. And this, I put here, the latter is treated as the same trade. They're all going to go the same way against the JPY. It's a question of which moves the quickest. I'm not sure. So I'm just treating it as one trade. So at the moment, this one is 0.5%. We're taking 50% in. So we'll probably go back to 1%. This is 1%. This is 3%. Okay? So that's the way we do it. And sometimes, if we're bullish, really bullish of one currency, it's sometimes hard to work out which ones it's going to move the strongest on. So we just do a little bit of a mix. Now, in terms of the commodity currencies, for us, they are just so bearish longer term. And let's go and quickly take a look at all three of them. And in terms of, before we do, just why are we so bearish? Well, if you've got risk off coming, okay, they're the ones that are going to suffer the most. Okay, they're the most sensitive to risk on and risk off, and they're also basically going down because global growth is slowing, even if we don't get big risk off. Okay, so everything is against the commodity currencies longer term. Right, let's go and take a look at them all very quickly and look at the trade setups. Use the charts from our member center for the last three pairs. This one is AUD JPY. Now, in terms of our entry, you can see it 79.80, and we got up here, came off the level. She snaps the 20, which we're always looking for, like I said, in big trends, and look at it go down. And it only recently came back to just briefly get above the 20-day moving average, and we're now heading south again. From the perspective of our trade in this one, it's 530 pips at this moment in time. Is there more downside? Yeah, in my view, 60. I've got 70 as a level in between, but if we get down to 60, what's the percentage change from where we are now? It's over 19% with no leverage. Okay, even the first target, it's near enough double figures at 70. And this is a really big, strong downtrend. All the commodity currencies, I think I said it when we were doing the previous chart, global growth is slowing up. It's bound to hurt them. Are we going back to really big risk on? Well, we might, but at the moment it doesn't look like it. So I would view this as a good, long-term sell. You've got one level of resistance here now, which is a 20. Second level, the big round number. You see stop tuck just behind it. And we'll see if we can run onto the downside. But the big trend is down. This bit of sideways here, just consolidation. You very often get that, don't you? And then the big trend looks like it's kicking in again. If you look at the monthly chart, I'll just show it to you. We're looking to get down to this cluster of candles here. I know, it's lower than 60. I've just got it a little bit higher at 60, which is the round number. Then obviously you've got another level in between, there, which is the 70 level. So yeah, good long-term downtrend. Now, in terms of not being able to pick the best, this one's moved really, really nicely, okay? This one here we've got, which is CAD JPY, hasn't moved as well as we'd have wanted because basically we did get in and we got stopped out recently, but it's only like about, I think, 140 pips or something like that. But she comes up towards the 82, she snaps up through the 20, and we took ourselves out, and now we've resold again. She's taken out 20. It's very often you can just bounce above the 20. That's why you always have your stop a little bit back, okay? This pair has been a bit more resilient, let's say, than the AUD. But it's only a minor profit, but monthly support at 70. And then actually I need to put in 60 as well, because we're looking for 60 in this one. So coming short, will this level break? My own view is yes. I'm not worried about being back in early on this one at all. This one hasn't done as we thought yet. That's why I've done 3 effectively. I thought the CAD would actually melt down with crude oil, but it didn't work out that way. But compensated with the AUD, and also we've got the NZD. So let me just go and take a look at that. I've just got to get my menu back because it's on a different page. So I'd have to scroll up. Where are we? Here we go. Right. My charts have disappeared. I'll do that. There we go. Where are we? It's going to be this. Here we go. Here is the NZD JPY. Make it a bit bigger. This one's actually quite a nice one. Okay, in terms of, sorry, I'll just get my mouse to work. In at 75.30, and again, it's a nice plunge down. You do get a pop above the 20, but stop's always back from the 20. 20 is normally kind of our first level that we're looking for rallies to fade back to. Then we'll go behind the second level with our stop, get briefly above 72, and then we tumble down. On Friday, we closed at 70.46. So basically near enough 500 pips. Where are we going? Again, I got 60 on this one. So you've still got another, about 1,000 odd pips to go. So you can see nice trends. We're not, I think I stressed it when we're doing USD JPY. We haven't got big risk on these trades, and the fact that we haven't, means you're not looking at price action, you're not panicking, you're not getting stressed out in terms of the inevitable retracements. Okay, so we'll see how these go. I think they've all got good potential from where we are now. I think, I've got a feeling that CAD JPY could play a bit of catch up. In terms of Euro JPY, covered that in a video yesterday. That just looks so bearish to us longer term. Of course, things can change, and obviously we do monitor, the positions daily if there is a change, big change in the fundamentals. But I'm not seeing this moment in time a big change in the big fundamentals in terms of our yen bullish stance. So yeah, I mean, I just like long-term trend following, and I like swing trading as well. But in terms of long-term trend following, it's not as difficult as most traders think it is. I mean, reading just big fundamentals, and then managing with technicals. You can see my technicals are extremely simple. Have I covered everything I need to? I think so. So we'll see how these trades go. But thank you, as usual, for watching me. Take care and have a good day.